Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. Right now, Carvana is the absolute best stock on Wall Street, at least for today or for the next few hours. So let's quickly break down what is going on, because the stock is up more than 50% so far today, and by the time I'm done with this video, it could be even higher. And anytime a stock takes off like that, it is worth raising an eyebrow at. So Carvana is basically the vending machine for cars. It got very famous for being a vending machine for cars. They are one of the primary adversaries or competitors to companies like CarMax. Now, Carvana was a very popular company during the pandemic, and that is where their story begins and ends, because Carvana got into a whole lot of trouble after the pandemic because a lot of their cars they were selling were not legally sold, and that was an issue. They took on tons and tons of debt, and once the pandemic started to wind down and interest rates started to go up, they paid way too much for those cars and had to sell them for a discount, taking on close to like $9 billion in debt. They were one of the worst stocks and companies really over the last year, maybe even year and a half, if not longer. But today it's up 55%. So I've got three numbers that I want to read out to you to show you how crazy today's number is, but also how terrible Carvana has been. All right, so I'm going to start at the top. Year to date, so from January 1 of 2023 to the time that we are doing this video, Carvana is up 410%. Okay, I want you to write that down, file it away, okay, because the next two numbers are going to be even crazier. Okay, so it's up 410% just this year so far to this point in 2023. Now, if a company is up 410% in 6 months basically, how much do you think it will be up over the last year? Let's just take it back. Last 6 months, which is year to date, you're up 410%. So let's step back and let's say over the last 12 months from June 2023 to June 2022. The company is still down 4.5%. Think about that. How do you make 410% in 6 months, and then you go back just another 6 months, an entire year, and the company is still negative? How do you lose money after making 410%? Get this, if we go even further back and just say over the last 2 years, how much money do you think you would have made or lost in a company like Carvana? That answer is negative 91%. Not negative 91%. You would have lost 91% of your money had you invested in Carvana 2 years ago and held it, even with the last 410% gain. Now, the reason why that happens is just the way percentages work. At one point at the beginning of 2021, the stock was at $124 a share, around $124 a share. Now it's just like $24 a share. So 50% of 24 is different than 50% of 124. So that's kind of how you get that math. Obviously, at least for me, obviously this is not a company that you want to buy into, even though they might have some pretty strong financial results, at least they say, and that's what the press release said, around August 3rd. That's when they're expected to announce their earnings. The problem here is there are going to be a lot of people who saw this today and want to hop on it. If they haven't hopped on it already, going to hop on it in the next 24 to 48 hours. Some people might make money. That does happen, but it tends to be quite dangerous because anything that rises this fast, we have seen time and time and time again, usually falls pretty quickly. So I want you to be careful. Continue reading about it, because maybe if it's not this year in 2023, maybe 24, 25, Carvana will get back to being a normally run company. Perhaps they'll pay off the debt and be steady. Right, so I'm not here to say that Carvana is GameStop. I don't think they're that bad, or I don't think they're GameStop or AMC per se. But I do think people are going to buy cars. The market is going to be kind of shaky in my view, because as long as you're raising interest rates, people looking to buy cars are going to be disincentivized to do so. Where is the supply and demand in terms of used cars compared to new cars? And if there is a recession, are people going to go out and buy new cars, or are they going to hold on to the cars they currently have? These are questions. These are questions that I would be researching if I am seriously looking into Carvana. But for me, because I don't enjoy losing money, I would probably sit this one out, because again, history has shown us A company that rises 55% in a single day, it don't stay up there for long, right? But also, even if you took out, well, actually, if you count today, it's one reason why they're up 410% this year. But they have been quickly rising for the majority of this year, even prior to today, and it still wasn't the most healthy company. So you still want to be careful there, because a 400% gain in 6 months, and you're still negative over the last year and even 2 years, that has to stand for something, and it means that you should absolutely be careful. And you can take this and apply it to all of your investments across the board. So there you have it. The last thing I'll say too is this is one reason why you want to be very careful around penny stocks, stocks that are $5 or less, because a lot of times they fall into these categories where people think that this one company you've never heard of is going to be the next Carvana. That's hard to predict. That is extremely hard to predict. Nobody really knew. I don't think it was public information. They were going to release a press release today. Earnings, though, is going to be on August 3rd. So I'm throwing that out there. But the issue here again is, should you invest in it now, even though it's 55% more expensive, in hopes that earnings is going to be great? I don't know. That's a gamble, and I don't feel like gambling, don't feel like losing money. I would rather go with something that is a lot more predictable and a lot more stable. So that is my take on it, but we'd love to hear yours in the comment section below. All right, that is it for me today. As always, you want to make sure that you check out our members only. In case you have not noticed, in case you are new, you definitely want to hit the like and subscribe button and drop us a comment. It absolutely helps the channel. But also, we have more than 1,000 videos on this here channel. So if you are looking to learn more about the stock market, learn more about a specific stock, a technique, a question, it is likely somewhere on the channel. All you got to do is subscribe and hit that search bar, and make sure you turn on your notifications, because people on YouTube say that. So I should say that. All right, that's it for me. I'll talk to you tomorrow. Bye.